Hello guys, my name is Alejandro. Welcome to my channel. Today we're going to be talking about the stock market and some strategies investors use to make money in it. So let's get started. So the first thing that I want you to know is that anybody can trade stocks. You don't need to have a lot of money, have started finances, or pay someone to come trade stocks for you. Everything can be done by your own if you take the time to learn. You can always pay someone to come trade stocks for you, but keep in mind that these people charge very high commission rates. And at the end of the year, in the long run, it's going to affect your performance. So this video is made for everybody that want to spend some time learning about the stock market and they're ready to invest on their own. So that we can get started on how to trade. To trade nowadays is very easy. You can start trading with very little money, with as little as $1. To do this, you're going to need a broker that allows it. I'm going to recommend a couple and leave the sign up link below. The first one that I'm going to recommend today is going to be Robinhood. Why am I recommending Robinhood? Robinhood is very easy to use. It's very user-friendly and you can download it in your phone in 2 minutes. Also, you can get a free stock if you sign up with the link that I'm leaving in the description of this video. The second one that I'm going to recommend is going to be Wealth Simple Trade. Wealth Simple Trade is also commission-free stock trading. It's actually the first one to be in Canada, and 1.5 million people use it. You can also get a free stock if you sign up with the link that I'm leaving below. And the last one that I'm going to recommend today is going to be WEBULL. I really like WEBULL because it's also free commission trading, very easy to use, and you can get 2 free stocks if you sign up with the link that I'm leaving in the description of this video. So now we're going to talk about a couple of the most popular ways that you can make money in the stock market. The first one is going to be buying shares of a stock or ETFs at a specific lower price and then selling it at a higher one. For example, if you go today and buy Apple stock for $150 and you sell it tomorrow for $200, you're going to be making a profit of $50 because you sold it for a higher price than you bought it for. Whatever you profit is going to depend on how much the share of the stock has gone up since you bought it. It can be infinite. It can be 10, 20, 30%. Infinite. It's going to depend on how much the stock has gone up and how it's performing. I'm going to give you a better example for you to understand it better. I want a specific tea. This tea. Everybody is selling this tea for $150 and people are paying $150 to get it. I want it. So I go and I pay $150 for this tea. And I keep it with me overnight. Next morning, I check the news. Everyone is talking about this tea. It has become such a popular product that people have been offering more money to get it. Now everybody's selling it for $200 and people are paying $200 to buy it. So the tea that I paid $150 for is now worth $200. So I want to take advantage of this. So I'm going to take the $150 bottle of tea that I bought and sell it for $200. Now the tea is gone and I have $50 for myself in my pocket. And this is how you can make money and profit in the stock market with buying low and selling high. Some stocks pay you a certain amount of money for buying and holding them. This can be Apple, Chase, Microsoft, Target, etc. This is called dividends. And it's another way that you can make money investing in the stock market. To understand the basics of it is very simple. A share of a stock is a small fraction of a company. When you buy a share of a stock, you're basically becoming the owner of a small part of that company. So if you buy a share of Tesla, you can say that you're the owner of a small part of Tesla. This is because the company, Tesla in this case, has become public and is letting other people invest in it. Is letting other people invest in Tesla so that Tesla keeps growing. And as Tesla grows, so does your investment and so you make money. So investing in the stock market consists of purchasing shares of a company that you think is going to do good in the future and is going to grow. And as it grows, so its shares. And they're going to be more expensive than what you essentially paid for. And this is how you can make money in the stock market. There is always a risk in between this. The risk that you're taking is that if you buy shares of a company and that company performs bad, then the shares are gonna lower the price. And once you sell them, you're gonna be selling them for a cheaper price than you essentially paid for. For example, we're gonna talk about the Apple stock. You buy the Apple stock today for $150. Tomorrow you wake up, you don't want that Apple stock in your portfolio anymore. You wanna sell it. But the Apple stock is now being sold for $100 and you paid $150 for it. You don't want it. You don't want to lose the entire $150, so you go ahead and sell it for $100. Now you have lost $50 because you sold it for a cheaper price than you paid for. I'm gonna give you another example, and this time I'm not gonna use the T, I'm gonna use the aloe. I go ahead and I want it, I buy it. Everybody's selling it for $100, everybody's paying $100 for it. I buy the T for $100 and I keep it overnight. The next morning, I check the news. Nobody likes the aloe. Nobody wants the aloe anymore. So nobody's buying it. The people that have the aloe and that sell the aloe, they want to still try to sell it, so they lower the price of it to $50. And now this aloe is not worth the $100 that I pay. It's worth $50. I don't want it either. I don't want to lose the entire $100. I'm gonna go ahead and sell $50. Now, the $100 bottle of aloe that I bought, I sold it for $50. And now I'm negative $50 in my pocket. I lost $50. And this is how you can lose money in the stock market. This is why I told you that risk management at the beginning of this video is very important. Imagine if I put all my money in this bottle of aloe and I put $50,000 and then tomorrow is only worth $50. I'm gonna be losing $49,950. The same way that you can make a lot of money in the stock market, you can lose a lot of money. And this is why risk management is very, very important. Remember that you're not losing your money until you sell the stock. You can always hold it and have the possibility that it will go back up in price, and that way make your money back. For example, this bottle of aloe that I bought for $100 that is now worth $50, I hold it for a period of 3 months. And in 3 months, people want it again. And now the bottle of aloe is worth $100 again. So I'm gonna go ahead and sell it for $100. I broke even. I sold it for the same amount that I bought it for. The worst case that can happen is that the company becomes bankrupt. If the company becomes bankrupt, you will be losing, if not all, the majority of the money that you invested in that company. Now you might ask yourself, okay, who dictates the price of the stock? Where does that number come from when I say it in the broker? The answer is very simple. It's people themselves. If you go to your broker and you see a Microsoft share for $150 and somebody comes and offers $140 for it, a person that owns a Microsoft share says, okay, I'm gonna sell it to you for $140. Now, the number in the broker is gonna change from $150 to $140 because it was the last transaction that took place. And this happens millions and millions of times during the day. And that's why the range of the price of a stock is always changing. Now the $1,000,000 question. How can I find a company that is gonna outperform, I can invest in, and in the future, I'm gonna be making a lot of money? Nobody can answer that. If you could see the future, you could become a millionaire in a very short amount of time investing. Sadly, that's not possible. What it is possible is that you can perform a series of steps to analyze a company. And with this analysis, you can make projections that is gonna help you succeed investing. My favorite analysis is fundamental analysis and long-term holding. This has been proven to work by real-life cases, such as Warren Buffett. Warren Buffett is one of the most richest person in the world. His net worth is $103.9 billion, and he did his fortune investing in the stock market. I'm gonna give you some ideas that I consider are the most important when starting a fundamental analysis on a specific company. I always like to start reading the earnings report. I start reading the annual earnings report, which is called the 10K, and then I move to the quarterly earnings report, which is called the 10Q. Here you will find a lot of detailed information about how the company operates and its projections. You're gonna find financial statements, balance sheets, the risks when investing in these companies. Basically, after you read these reports, you're gonna know the company from top to bottom, and it's gonna help you feel more confident when investing in it. I think that it's very important for you to read these reports before you invest in a company. What would happen if you invest in a company, in a business, without knowing anything about it? You most likely are gonna end up losing your money. And this is why analysis and risk management is very important when investing. The 3 financial statements that you're gonna find when reading these reports are gonna be the following: cash flow statement, balance sheets, and financial statements. In these statements, you're gonna find all the financial information about this company. What I'm looking in these 3 financial statements is the following: that their sales and profits are increasing year after year, that they have a lot of liquid assets, that they're investing in innovating new products, and that they have little or no debt at all. This metric is also known as operating income, and it's ideal that it's a positive one. Now that you know where the company stands financially, it is important for you to read all the recent news regarding the business. You can use sites like Google, Benzinga, Yahoo Finance, Bloomberg. So now this video is coming to an end, and I know that everything I just said is a lot of information to cope with. but trust me, it will be very difficult for me to share everything I know in a simple video. So if you want to keep learning with me and you like this video, please hit a thumbs up and subscribe so that I can see you on the next one.